I think, one of the sort of things that really draws us to sort of blockchain and Web3 is the fact that you can participate in the shared network effect. And that in the end of the day, yes, some people might make a lot more money than you, but if you are within the network, then you can participate in the network as well, and therefore gain if as others gain too.
Yat, fabulous to get you back on Real Vision.
No, wonderful. But what? How long ago has it been?
I just checked
things move so
actually.
fast.
October the 15th, but in crypto years, that's about 10 years.
October? Oh my goodness. That last year, October, the world has completely changed, actually, if you think about it. Wow. Amazing. Yeah.
So let's talk a bit about that. Let's talk about a little bit about the broader picture of the world, crypto, blockchain, where it is now. And then we'll talk about the ridiculous amount of things you've been up to and
Sure.
a kind of bit about where it's going, what you're seeing, that kind of stuff. But what's your observations now about where we are in all of this?
So, a lot of people talk about the current state, and I often get this comment about, oh, it's a crypto winter, and you got to hunker down and all that stuff. But and you would remember this as well. We really experienced what a true crypto winter was like, around 2018. And so, if this is a crypto winter, then 4 years ago was truly a crypto ice age. So it's a bit, it's a bit different. So we think the weather is very chilly, but it's not a winter from our perspective. But the other thing that I also think that's happening, which is really interesting, when you think about what happened with Terra, Three Arrows, and all these sort of, you could argue in some ways for a certain generation of crypto people, cataclysmic events. Actually, for the people in our space, which is more in the non-fungible space, the culture space, even though obviously values have come down and all that stuff, they haven't been affected in quite the same way because it's not their world. And so I actually think it almost a shift of the narrative of why you're going into crypto, because the people who went into crypto in the early days were very financially oriented because, at the end of the day, one of blockchain's very first use cases was a heavily financial one. And the people who joined the space were really looking for, in many cases, the speculative value, the gains to potentially be had. And after all of this let's call it mini collapse that took place just a few months ago, that particular crowd became less vocal. Maybe they disappeared, some of them, but it no longer became the predominant narrative of crypto, which frankly was a little, getting to some extent a little distasteful in some ways. When you see, the expensive cars and the yachts and the Wen Lambo and, all these things that, we can laugh about. But it is quite sort of galling and distasteful for all the people who are not in the space and who look at this and say, isn't this just another tool for the rich? And doesn't it just exacerbate the problems of the world that we already see today? And now making room for a new wave of people who are not sort of in that particular space in the same way, who care about the products, who care about building. And what I love about let's call it little winter chill, if you want to call this, is that the people who are building in this time, as when we've done back in 2018 and the investments and the opportunities we saw, they do it because they believe in something greater. Because again, if you are just here for the money, maybe you'll find better opportunities. Certainly in 2018, that was true. But, some of our most high-profile success stories, whether this is Sandbox or Decentraland or Axie Infinity or Opensea or Dapper Labs, actually, we worked with them all back in 2018, 2019. That's how we got our opportunity to also invest in them, or in some cases, sort of own them. And that actually is the opportunity. And we see it exactly the same way. So from our perspective, since we take a long view, actually, this is the best time to build, because also from an investment standpoint, it's no longer just, you got to close the deal next week. Otherwise, you miss out, right? You actually have time to do sort of a lengthier and more sort of thorough due diligence. You can have conversations with the team. Nobody expects the deal will close, within the next 5 days. It's more like, okay, we need to analyze and review. And I think that's actually created a much healthier sort of environment as well. And at the end of the day, when you look at the value, just as an example, as the value of the tokens in question, it's a blip, really. Because when you compare it from 2018 to where we are today, which is really only 4 years, right? It's actually, generally a pretty positive lineup. But then if you just take the lens for the last 6 months, you might say, oh my goodness, disaster. And I was just in Korea about 2 weeks ago, speaking at Korea Blockchain Week, and I gave a comparison between sort of the Miracle on the Han River, which is basically the Korean economy. And for those who don't maybe know, Korea actually some 4 decades ago, its economic capacity, size, and population was actually smaller than North Korea. And now, it's somewhere between number 10 or number 12 in the global GDP. Right? It's one of the wealthiest, most powerful nations in the world. And one interesting thing is that it's entirely driven by the value and power of culture, because South Korea doesn't have natural resources. It doesn't have oil. It doesn't have it. What it has is intellectual capacity. It has innovation. It has ideas. It has culture. But all the things that it did to evolve to where it is today. And then you remember the Asian economic crisis, and that was pretty disastrous. But when you chart it out, it ends up looking like a blip as well, right? In the relative span of where Korea was and where it is today. So I view this current scenario, in a very similar lens.
Yeah, I mean, I think that's a really interesting point. South Korea, going back to '98, got absolutely obliterated, as all did all the Asian economies. But the funding that really had gone into Korea in the prior 10 years ended up being the outcome afterwards, which was this incredible economy. And what I'm noticing now in the digital asset markets is, 60 billion of VC money went in the last 18 months. And it's almost at the perfect time. Yes, a year ago, everyone was still scrambling to do deals too quickly. But basically, there's been a huge amount of capital put in over this period of building, when everybody's focused on actually building stuff and not on the price goes up, number go up, because that's distracting for everybody. So it kind of feels like the set of outcomes coming out of this might potentially be really game changing, because the amount of capital that went in and the number of new paths that everybody's taking here.
One other interesting parallel as well is, if you look at, for instance, blockchain gaming, almost all the funding in the last 6 to 12 months has gone into blockchain gaming companies in the gaming space, for instance, which is basically just another signal of the inevitability of where blockchain gaming is going because of just the investment. Also, the smartest people in gaming are starting to look at that and have either already joined or built startups and enter this field. And perhaps the other interesting statistic is that in the last 6 to 12 months, many investors who are not in crypto have entered the sort of the Web3 world or the blockchain world through gaming for the first time. So their lens, their entry into blockchain, so it's not just adoption of the sort of mass consumer, it's actually an adoption of the traditional investor as well, because they understand the narrative and they appreciate that potential differently than, say, let's invest in a token that you can trade, for instance, but more the fundamental of, while a game that has ownership should be more powerful as a narrative, should be more meaningful to the end user, has maybe better revenue potential. These sort of more fundamental aspects are attractive to, I guess, the traditional value investor. And so they've entered the world of crypto through gaming.
I think one of the really interesting projects that's been an enormous rise since we last spoke was Yuga.
Yes.
Yuga really were the pioneers of building a community around an NFT, a PFP, but then created an entire ecosystem around it, the genius of, buying CryptoPunks and all of that as well, the Lava Lab stuff. And then on top of it, then they're moving towards gaming with the metaverse experience of the other side. And we're seeing these things all merge together. So we've got kind of NFTs, they've got a social token, which is a fungible token, and they've got now a metaverse experience, which is probably based around gaming as far as we know.
Maybe just one clarification as far as ApeCoin is concerned. Actually, the way to think of it is that, it's not their token, right? ApeCoin is its own token, and Yuga Labs adopted the token, but it of course started, you could say, through the drop, basically through the community of Yuga, you could say, but it doesn't end there, right? So, and the whole idea of ApeCoin as a foundation is to expand and grow the metaverse and as an entire space. But then separately, Yuga Labs with the other side is separately making games. So our studio Enway is producing separate games with Yuga Labs, for instance, and that has already been announced. but the details of that, still to be disclosed. But there's many partnerships that they're building on, and gaming really, if you think about it, for this particular generation, is one of the strongest, most powerful forms of distributing culture and distributing sort of media and information, because that's where we spend most of our time, right? Gaming as an industry today, anyway, is already larger than film and music combined. Last year was $180 to $190 billion industry, and occupies the attention of 3.4 billion people today. Now, the whole internet is something like 5 billion people, give or take, which basically means most of the world is gaming. So the other thing is that in gaming, the attention, the time you spend in gaming is also far more immersive than watching a movie. And I think that is sort of the important part about that. Every metaverse project, whether it's through PFP, whether it's through whatever aspect it is, must have a gaming strategy of some sort, because gaming is the mechanism in which the soft power of that culture is distributed. America's soft power, and America's power, we believe anyway, isn't just the military and the US dollar. That's obviously the hard power, you could say. But actually what made the hard power possible to execute was the fact that it had the most influential cultural soft power in the world, which was Hollywood, right? And its literature. We're watching, Friends, and we're watching, Marvel movies, and we're watching, what do? They disseminate American culture, American values to the rest of the world. And that's how they influence it. And then when, American business enters these countries, they're open to it. They're friendly. They're like, oh, wait, yes, we like the system. We like this culture. We want hamburgers. We want whatever, Nike shoes, whatever that is. The world has basically been already sort of influenced through the soft power of American culture. And the metaverse really functions the same way, but that soft power culture is basically through the lens of gaming.
But how difficult is it to choose what games are going to work? Because, there's a lot of games in the world, right? There's a lot of apps in the Apple App Store, and 99% of them don't. Now, you do a lot of investing in this space. At this particular nexus is one of your key focuses. How the hell do you find what you think is going to be successful? Because I find that really difficult.
Yeah. So one of the real difficulties in the traditional gaming world has been that gaming was considered very much a hit-driven business, much, I guess, like Hollywood, right? And that's one of the reasons why much of the funding and investment would typically go to sort of people who've had historical successes, because it's a little bit like, well, if Steven Spielberg makes a movie, chances are it's really good. So here, take my money, right? That's kind of and gaming has functioned in many ways the same way. And then you needed the big studios, whether this was EA or Activision or, Nexon or those companies, who would have the financial muscle to finance these incredible games and then hopefully see them succeed. And that's the traditional model. And so typically VCs have stayed away from this because it was very hard for them to understand, well, how do I know this is going to work? Because it's not very scientific. It's a little bit of a sort of, it's culture. It's sort of a feeling. It's like taking a bet on a person's creative idea. And, it's not just a, small investment. Some of these games cost hundreds of millions of dollars to produce. So you're taking a really big bet to make it work. And you have elements like maybe access to distribution, special relationships, all these things that maybe you could leverage. But broadly speaking, you're taking a bet on a very talented team. And that's because most games today still have very inflationary designs, which means that the gaming economy itself is not a value. And the users themselves are really only experiencing the game as a form of entertainment. But what's changed, of course, is that because of the amount of time people spend on games, to the gamer, so the game company who's making the game, it's entertainment. So they monetize it like a movie almost, just maybe in better ways. But for the gamer, it's not entertainment. It's actually much closer to their personal identity. When you play a game and you have a rank, it means something. When you buy a skin, you show it off to your friends, or when you win it in a competition, and it's your social status. So the relationship between how the gamer sees his relationship with the game has become different from how the game studio sees it, which sees it generally just as an avenue of monetizing and driving value. So this is one of the reasons why we focus on gaming and blockchain and gaming, because gamers already had a sense of ownership, even though they're just renting. And so therefore we felt that was sort of one of the easiest and best paths of adoption. Although, there are some differences where in the West, as of late, many Western players are not so positive around blockchain games because of the fact that, it appears to them sort of the sort of extreme capitalization and sort of financification of that. But in the East, in Asia, everyone loves it and it's all over it. So it's an interesting sort of difference there.
Why is there that pushback that we've seen when people have looked at kind of introducing NFTs to traditional gaming world, and the gamers have been completely up and up, but they'll be monetized in other ways, which is weird. So it's not like they're not monetized anyway. Why that?
It's a really interesting question, and it took me a while to understand it. But let me first sort of talk about a little bit some of the difference between sort of the Asian gamer, that what he's used to from a design, and from the Western gamer. So Western game design has typically been centered more around a more, let's call it, sort of, I guess, socialist, equitable type structure, more based on skill and a kind of merit. Whereas in the East, actually with free to play, they really sort of pioneered that in the early days. It was quite okay to sort of pay for success, in a sense, sort of pay to win. So I would buy a better sword and I would get ahead, and that's okay. And the other players wouldn't consider that as something that was unfair, because he paid the money to do so and he could enjoy that. And so that's a little bit of that. So free to play in the early days, we're talking about maybe 10, 11 years ago, had a similar reaction. If you look for articles in the West, when people talk about the free to play business model, which basically is the predominant gaming model today, many of them were railing against it and saying this is going to pervert the sort of gameplay, because back then it was literally either a subscription, right? World of Warcraft was a subscription-based game, or you would pay a one-off like $50 or $60 for the game, and that's it. You never had to pay any more. And then when free-to-play came, the game was actually entirely free, and then you would actually end up paying for additional services or functions or skins, whichever. So there's a little bit of that sort of cultural difference that sort of kicked that off. But I think the bigger sort of, I guess, revolt, you could say, amongst certain, it's not true for everyone, but certainly they're very vocal about this, has to do with this criticism around the financification of games. Now, if you know how the game industry works, you are already heavily financified anyway. The only difference is that none of that value goes to the player, it goes entirely to the game studio. So there's a little bit of that sort of lack of knowledge as to what happens. Because actually, if a gamer actually got to understand properly that his time, it's not just him paying money, but that his time inside the game adds to the network effect and possibly creates maybe hundreds, if not thousands of dollars of more long-lasting value to the game economy and therefore to its value, the way you think about your contribution to the game changes entirely. Right? You're going to say, wait a second, if you're making this much value for me, is that reasonable? Right? But of course, they never know this, and therefore they make the assumption that it's free and the whole thing, and therefore there's not that much value. Which is, by the way, how social media companies work as well. Right? They entrap you in that thinking that you get it for free, so don't expect much, right?
There's nothing for free in this world.
Yeah, there's nothing for free, right? And in the meantime, they're making billions of dollars based on your time and attention. So it's a little bit of the same. But the other thing that I observed, I was stuck in the US for a long time because of COVID, and normally living in Hong Kong. Actually, they banned all flights back to Hong Kong for a long time. So I was stuck there. I got to sort of learn a little bit of the American nuance hanging out with my very libertarian Democrat friends. And what surprised me, because I was, talk about crypto, of course, right? And it'd be like, why, you're really an ultra libertarian, but you don't like crypto. I don't understand. Explain this to me, right? What is wrong here, right? And I came to understand, at least with my sort of sample group, that it wasn't a revolt specifically on crypto as it was on capitalism. And so the heart of, I think, what's happening in, for instance, in America is no longer, because from an outside lens, we look at America, America is the capitalist capital, right? It's everything is around capitalism. But actually, when you start then looking at what's happening in the Democratic Party, and when you're thinking of what's happening with, the rise of people like Bernie Sanders, who all have, well-intentioned, you could say, but it comes from a different lens, which is that the system that, the capitalist system is viewed by many of that particular sort of thinking as bad. And money itself has now gotten, in the eyes of some, this feudal context. As in, if you have money, you make more money and you retain your power because of the monopoly of money. Right. So it's a thing of the rich get richer and the poor get poorer. And when COVID happened, that was exacerbated, right? When COVID happened, it wasn't that all of us were struggling equally. It was actually the ones who had money made even more money, and the ones who struggled actually really struggled, and were worse off. And so this idea of crypto and the criticism is this is just a tool for the rich. It's a way for the rich to get richer. It's all part of the we see this narrative over, and then of course when you get people showing off their wealth in a certain way, which is particularly tasteless, when the rest of the world is struggling, right? All these things add to this narrative. Then the introduction of what appears to be a strong capitalist narrative into a gaming world that is generally designed originally in the West to be more egalitarian, more sort of merit in a traditional merit-based system, then it becomes problematic for them, because in a game you could be playing with a high school teacher and a CEO and a kid together, and it didn't matter what you are. But in the real world, it does matter, right? Those communities wouldn't normally mix. And by the way, I wouldn't say America was always like this, but because of the rising wealth inequality, it's become more like it. So capitalism has become classist in a sense to the West. Whereas in Asia, sort of capitalism and sort of the democratic system as well is fairly new, like South Korea. And even though there is, of course, strong inequity, the net benefit, like we have in living memory, like my parents, for instance, would remember a time in where they did not have property rights, where there were no capitalist benefits, where you couldn't have have rights and you couldn't have income, and so for them it's a net positive. And whereas I think that if you look at the last 20 years, it hasn't had that effect for especially young people, for instance. And that's probably one of the big reasons why there's been sort of a revolt in that. Although I think, once people understand it, they'll come around, because ownership will give them more control and more rights, and therefore a way to have a certain kind of power within the ecosystems, the games that they love. But they don't understand that. I also think that America has started taking elements of democracy for granted.
And I've looked at this for a long time and thought, well, really, crypto is actually apolitical. There's very few political fights that go on in crypto. And the reason being is really, when you think about it, it is a capitalist system with progressive values because it's based around community, right? It's based around everybody participates in the spoils, which is a progressive value, but you get the opportunity to create wealth as well. For me, it's like, this is what we've kind of been waiting for, because the two sides have been splitting further and further apart, and never the twain shall meet. And here is a system that allows participation by everybody, but a meritocracy and opportunity as well.
I agree with that. I think, one of the sort of things that really draws us to sort of blockchain and Web3 is the fact that you can participate in the shared network effect. And that in the end of the day, yes, some people might make a lot more money than you, but if you are within the network, then you can participate in the network as well, and therefore gain as others gain too, right? And really, to me, this is one of the benefits of sort of actually a kind of positive form of capitalism, which is capitalism is the incentive system that drives innovation and drives growth, and that's all really important. But the problem is that, especially in certain parts of the world, America being perhaps one of them, capitalism has become very zero-sum. And as a result of that, the growth of someone comes at the expense of someone else, right? And that basically is, one of the sort of, I guess, big problems. And unfortunately, I think traditional venture capital has also started to exacerbate this, because the amount of venture capital that is pouring into companies today is far, far greater, even in this supposed, sort of, bear market, in comparison to anything else, because everyone's looking for the winner. And and if you end up putting tremendous amounts of capital into one company to have them sort of try and succeed, then it becomes a zero-sum outcome again at the expense of others. And so I think this idea, therefore, that actually with Web3, I can participate in this. So you can make much more money than me, but I will still be net better off because of the fact that you've made so much money in this ecosystem, as an example, and therefore I can benefit from that is really very powerful. But I do want to comment on blockchain being apolitical. While I think blockchain as a technology, obviously as a technology, arguably is apolitical, but I think of blockchain as a political system, right? The fact that it's transparent, the fact that it has these frameworks, the fact that you have governance on them, or the way that you run governance, it sort of embeds a political system and a kind of community that is drawn to this particular political system or framework into it, which I think is also really powerful. And I think, especially as DAOs are becoming much more popular.
So you're thinking of it as a third way, essentially, which is how I've thought about it.
Yes, correct. And I also think it's a wonderful way to reintroduce democratic values, because I feel that democracy, particularly in the US, has been taken for granted because it's been there forever, right? And if people actually valued the democratic institution as something precious, then we would be seeing a lot more voting than maybe sometimes barely over 50%. Right? And by bringing in democratic systems in sort of the way that our games are run, or in the metaverse, with tokens or with whatever our everyday interaction, you start to learn why the democratic system is perhaps important or valuable. You can also iterate on it and improve on it, and you also don't feel powerless because, in a sense, everything we do in life is generally built on a consensus. How we negotiate with our family, where we go for dinner, what movie should we watch, right? We're building consensus every day. We just never think of it as a system, right? So we're not really powerless, right? But then we think of this grand scale of the country we might live in, and we say, my voice doesn't count. I'm just one out of a gazillion. But when you are constantly in that system, you realize that even small decisions you make have potentially big impacts. You will take it seriously, and I think blockchain, has that capacity to reintroduce these values for those that may have forgotten what they stand for.
I think you raise a really important point: is the iteration on democratic systems that can be now done, because we're stuck with a lot of broken systems that were developed 200 or 300 years ago. You think of the British parliamentary system or the US system. And you simply can't change them because they're so ingrained. It's not in anybody's favor to do so. But now we're being able to try all sorts of stuff. I had a great chat with Kimball Musk about what he's been doing with charitable DAOs and how you can redistribute philanthropy in a more efficient, localized level by using a DAO structure. I think there's a lot to come. And I thought that the Constitution DAO was a huge breakthrough in something else here as well. It didn't work, but what it showed is how fast you can coalesce capital around a particular purpose. And it was staggering.
One of the things where we're, so I'm on the special counsel of the ApeCoin DAO, and it's really interesting. On one hand, a lot of people were originally quite critical of a DAO because they're like, well, how can you make a decision on consensus? Everything will take forever to build, nothing can get done, right? But then if you think about what happened with ApeCoin, it's been barely 6 months since ApeCoin was launched. And not only does it have, a massive token, that's just one thing, but it has an active community. It's gone through multiple proposals, is building, cool new products that basically have been voted on by the community. And the progress that ApeCoin has done over 6 months is faster than many startups that have emerged with perhaps more significant capital over that same period of time. So to me, it's actually living proof that you can sort of move fairly quickly also in a sort of more democratic system, if you will, because what happens is that when the decision is being made, it is voted through basically the token holders, and then there's full legitimacy. It's no longer a guessing. I think you might like this.
But what is the voting participation rate versus what it is in a regular system? I guess it's still lower because people don't really understand. I've never voted with my ape tokens. I've had ape tokens since they launched, but I've never voted with them.
Yes. So the number of participation obviously is relative to the amount of tokens in circulation is still low, but the participation of the members that are active is quite high. And I think one of the reasons why the participation also is low is because quite a few of the ApeCoin is still in centralized exchanges. and as a result of that, they're not being moved out for voting, right? But if you hold it basically in your MetaMask or in basically outside of an exchange, then you can actually start using it to vote and so on. And so yes, the participation rate isn't obviously it's nowhere near sort of mass participation, but that's the goal. But more importantly, though, the community that's building the core of that is very involved, and we're now sort of reviewing and approving for votes. Sometimes up to 3 to 4 proposals a week in some cases, and lots of ideas are incoming, which is also incredibly powerful because that means people are inspired to present their ideas. Whereas in the beginning, they were a little gun shy or maybe even cynical, right? I'm not going to submit an idea. No, it's not going to go through. Who cares, right? And then when they start seeing, wait, actually, this project got funded or people got this happening, whatever, then they started to become sort of more active. So it's early days, but the point being is all of that took place in just 6 months. And that kind of progress, for most companies, they don't even achieve that in years.
Yeah, no, I'm a huge fan of the whole project. So what are you seeing in gaming now that's getting you excited? The early stage stuff that you're getting a look at, because we talked about this last time, you're basically getting to look 5 years ahead of everybody else at what's coming. What are you looking at that says, this is fascinating where this is going?
Quickly on the gaming side of things, I think we certainly had a hand in sort of helping grow the entire blockchain gaming space. And as I shared earlier, almost all of the funding in gaming basically went into Web3 gaming, which for us means that blockchain gaming is now a foregone conclusion. One could argue that perhaps a year and a half ago, it was still more of a promise. But with the kind of billions of dollars that have now been funded for blockchain gaming companies, it's only a matter of time before an incredibly awesome game, and some of them that are out are pretty awesome already, that can really sort of bring over the non-blockchain gamer who basically wants the benefit of ownership, but doesn't necessarily need to understand the intricacies of what is crypto and all that kind of stuff, right? And so one of the examples of a project that we're obviously big supporters of and backers of is one called Phantom Galaxies. Phantom Galaxies had a very unusual launch last year in that they made an entirely free mint as a form of user acquisition first, and basically giving out 500,000 NFTs, and then launched the alpha of the game without a token sale, without raising any revenues or monies from this, and got a community super excited. And then after that proof point was made and people were able to play basically a AAA game that was built on Unreal, then ended up basically going out and doing a planet sale. And what's also interesting in this kind of innovation is that there was no token sale. You bought the planet, and if you work the planet, then that's how you earn your tokens. Kind of sort of a proof of work, but a proof of, or maybe proof of play work, shall we say, as opposed to traditional kind of proof of work. And so that's how you would then mint a token that could then be used inside the game. And ended up generating a sum total of about $23 million of planet sales during the bear market. So, it just goes to show that, if you create some innovative ideas or you create high quality projects, there's still plenty of money around because the community and the market is excited for that. So the other thing is that because so much capital is flowing in from other investors as well, not just ourselves, we're going to see, we believe, in the next sort of, 18 months or so, give or take, not just an explosion of really high quality games, but as a result, also a large number of mass adoption from that kind of ecosystem, because the regular gamers are going to come into blockchain gaming whether they know it or not. And I think it will be led by Asian gamers because they're actually wanting this, whereas the Western gamer, a good number of them are sort of not sure about it or don't like it at all. And so but again, I think they'll catch up as they did with free to play. So our projection is that we think we're going to have, over 300 million users coming into sort of the Web3 space just on gaming in the next 18 months or so, give or take.
I also love this new business model that's forming, and we're even doing it at Real Vision now, which is you start with a community. You don't even have a product. You may have a vague idea of a product, but what you do is coalesce a community around a commonality of vision or ideas, and then you build product with the community, and you get better product market fit and better adoption.
The big thing that a community-driven approach does, which I think for a lot of, because they call it traditional builders, is difficult, is because traditional builders aren't necessarily consensus builders, right? One of the common comments I get is, well, Steve Jobs wouldn't have run a business like this. Yeah, but not everyone's Steve Jobs, right? And Steve Jobs may be a great visionary, but perhaps he wasn't, a community builder. It's a different kind of builder, and that's fine. People can build things in their own way that suits them. But the powerful thing about the community is that when you make a decision to build something because you got the endorsement of the community, is it comes with immediate legitimacy. Whereas before you launch a product, you have to then sort of sell the legitimate value and you sell why it was a good idea. Whereas as you form the product concept or whatever it is you're doing with the community, then legitimacy is established. And whether it works or not, everyone has a stake because that's what they wanted. And they go, yeah, maybe that didn't work, but we all own it, right? We all own our faults together. We all made this mistake together. And that's okay. Let's go for part two. It's a very different feeling as opposed to that's all on you. Right? So it's a very different experience. The other area that we started focusing on as well, because we feel that sort of the blockchain gaming segment is sort of well on its way, is how do we bring more mass adoption to the space? And so we started focusing our lens on education. And we acquired a company called TinyTab not too long ago, and TinyTab is a teacher marketplace. And just what I had just mentioned maybe earlier in your show. What NFTs do is they take content and turn them into assets. And then these assets have the ability to have these network effects, one of them being capital formation. And in this case, this is a marketplace where teachers create content and they make roughly anywhere from a couple $100, in some cases thousands of dollars, and in rare cases tens of thousands of dollars a year from the content that they create. So it's like a sort of teacher-made content for other teachers or for other parents to use. Now, through the ownership of the non-fungible tokens, whoever buys the NFT can now become a publisher of the work, and as a result of that, be entitled to the income that the material that the teachers originally made have as a share. This is no different than if you were sort of a buyer of an app on the App Store, for instance, that generates a certain amount of revenue. Now, a teacher that makes maybe $1,000 a year on content is nice, right? It's obviously good supplemental income. But if you think of this as a yield product that can generate, say, 10% yield, right? Or like owning a house, then maybe it's worth 10 or 20x of what the actual sort of income is. You give a teacher $10,000 suddenly, it changes their life. And we've seen some of that a little bit already with NFT art. But without the actual sort of certainty of the income, or at least a potential of the income. It's more about sort of maybe the scarcity of the community value, but still capital formation became possible with art. And now we think this kind of capital formation can start coming in sort of educational content as well. And if that works, which is of course the big experiment, then not only could we onboard sort of an entire community of people that are actually, frankly, at the bottom tier of society in terms of economic value, which is teachers, even though they provide perhaps one of the most important services to our communities, which is to educate our children. Arguably, they spend more time in school than they perhaps even spend with their actual parents, at least during a weekday. And what happens if teachers are educated on crypto, understand how to set up a wallet? Well, they're probably the best people in the world to teach others how to do it, since that's what they do. Not just our children, but just everyone else. So that's kind of what we're hoping we can achieve for a broader kind of mass adoption, and also a demonstration of the added value that blockchain can do. Because just like what it did with gaming and what it did with art, the power of blockchain is that it can actually create value in areas of the ones that are underprivileged or where value has not been fairly distributed. And I think teachers and educators are one of those as well.
Yeah, and also in this digital world, we can have a leveling of wages. So, you can
That's
be
right.
doing something in Ghana or Nigeria, and you can compete on roughly the same wages as an American, which is game changing.
Yes,
Because
it is.
they were always physical location of work. So therefore, the employer, Microsoft, would go to Ghana or Nigeria and pay you a tenth of the US salary. And it was a labor arbitrage. In a digital world, there's less labor arbitrage in that respect.
Yes. And also you have the data transparency, which is really one of those powerful things around blockchain, because now whatever the data is that is being delivered or is being sort of sold or transferred for, you can immediately see what that value is and therefore ask for your relative fair share. Whereas before, you would never know what that is anyway, right? You don't know what your time is worth on Facebook anyway. Therefore, you don't know what to ask for, and you'll just take whatever they give you, which is the other thing, right? So I think it creates data as that kind of sort of market commodity, and actually does what transparent markets do anyway. It's the more transparent the market, the more efficient it becomes. But it's the same thing here, right? Which is if you make data as a commodity more transparent and you know where the value flows, then ultimately you make the trade of that data or its derivative more transparent and more efficient as well.
But it might also level wages, much like globalization in physical workforce, the way that the West, the developed countries that charge higher wages, end up lowering their wages. So everybody has to work more. It's not straightforward that it levels everybody up in the third world to be equal to the first world. What we found is it destroyed wage growth in the developed world.
So I think that may be true when the market is mature. But right now, we don't think the market is mature.
No, it's still early.
Yeah, it's still early, right? And at that point, which I think is obviously a little bit out in the future, new systems will have to come into place, and we all of the companies in the space will have to sort of adjust, as we have with slowing economies. This is basically a national problem, right? Oh, GDP growth is no longer 10, 50% a year. What do we do with 2% growth, 1% growth? Okay, we got to do these things, right? But we've got a while out before that actually happens, because we're still at single-digit percentile global adoption. So if we believe that Web3 is the natural iteration of where the internet is going, then we have, at least, several billion people more to grow into. I look at the metaverse, the development of Web3 and the metaverse very similarly to how, the growth of China, right? In the early days, China kept growing because as an economy, it was just exploding in all these areas and all these new things were being developed. But it was hard for someone outside of China to understand what was going on. And to them on the outside, it felt like a scam. It felt like, it's impossible. And a lot of people, if you may remember, were talking about, the downfall of China and how it was all going to implode because it was all not real. Well, China certainly has issues to go through, but it's all real. It's a real economy. It's doing reasonably well. And it's not going away, right? And I think it's similar. The growth of China for the last sort of 20 years up to when COVID happened, I think the metaverse will grow in the same way, because adoption will continue to just more people will just join the metaverse.
Final thing is, one of the other ways I'm looking at mass adoption is ticketing. And I know you've been involved in Dapper. Dapper's just announced with Ticketmaster. I mean, the guys at Ticketmaster, nobody realizes. I know them really well. I mean, they've issued 10 million NFTs. They've probably issued more NFTs than anybody else in the world, and nobody realizes, because they've seen that Web3 is kind of the answer to their world of music and sports and tickets and stuff like that. That's an area to me that feels very intuitive, because tickets have become digital anyway. So if you have a wallet, you don't even know it's an NFT. It's irrelevant. It's just, this is your way, and you get to keep it afterwards, and you can trade it afterwards. And I think that's going to onboard hundreds of millions of people really quick, because people don't even know that it doesn't need to be blocked. They don't need to know it's blockchain.
Yeah. So, I mean, I agree with this. We actually backed another company called MoviePass, which sort of is going through a little bit of a rebirth, having sort of gone through, it's a new company, but, Stacy is the one that's the original founder of MoviePass. And he's basically doing it in a Web3 way, and sort of in his own way, looking to reinvent the movie ticketing business through that approach. So, and again, for onboarding, I think it's a very natural one. People, it seems to make much more sense. And it also becomes, in some ways, a kind of a tradable asset if you want it to be, for instance, which obviously it has within it the embedded utility of using it.
Yeah, I mean, I've still got above me here is my ticket from Live Aid in 1985 and my program from Live Aid, because they were a cultural moment in time that had significance, not only to me, but probably about 1 billion people. So, tickets are really interesting because they are a really special moment in time, whether you're at a sports game or a music event that matter to all those group of people there. And so they probably do have value. Not everything has value, but they can have value, or at least you get to keep them forever in a secure manner.
And the other thing is that the value, and I think this is so important, the value doesn't have to be valuable from a sales standpoint. It can be just personally valuable to you, as an heirloom, as some a remembrance, and the other thing is, what non-fungible tokens and the whole Web3 space does digitally is it preserves your digital identity and gives you a digital legacy that is truly yours. Because that's the other thing. Whatever we build digitally, the reputation and the image and whatever, actually isn't ours really, right? If you build a presence on Instagram, actually that presence isn't yours, which is the crazy thing, right? It belongs to Facebook actually, for instance, or whichever platform you're building. You're accruing their network effect, and you're not actually really getting that much value out of it. You're literally getting sort of, the equivalent of slave wages relative to the value that you're generating from that, we're generating from the platform. And I think this is something so powerful, because as the end user as well, you can now own a piece of that identity, and just passing it on is a kind of keeping of that legacy. One of the ways that I sometimes think of the fact that we don't own our digital space, in the Web2 world, is a little bit like not having your last name in some ways, because you don't have a lasting digital identity until Web3 came along, because it would be erased every time. And, back in the Middle Ages, basically serfs didn't have a last name, right? They were not, they didn't have it because of an identity, which is one of the reasons why some of their sort of, I guess, descendants would be named literally after the towns or villages or whatever societies they were after, because they didn't have a family tree. They didn't know where they were from, because they weren't meant to have an identity. They were simply laborers of whichever lord it was for, and they weren't supposed to have an identity beyond that. And there was something sort of really ruthless about that thinking, really, if you think about it at the end of the day, because by removing someone's identity, by not having an identity that is lasting, that you can pass on, it means that your next children, or your next of kin, or whoever is part of that particular called serf system, will feel the same way, and therefore, not have an identity and a root, and therefore always be servants, right? It's just kind of sort of classic feudal thinking. And while, obviously we don't feel the same way today, because, we don't live in a physical world in a feudal way. By actually always being subservient to a digital platform that could take away our identity or what we've built, like our apps on the App Store, or our handle on Instagram, or our ID on Facebook, we're actually under their control.
Yeah, and we lose history. It's
That's
hard
right.
enough as it is. You have photographs of your grandparents, and then you lose the photographs, or they deteriorate, and the history and disappears over time. I think of, how does the human soul survive? It's actually in memory.
It is. Yes.
It's in memory. And this gives a way of kind of recording truths from whatever perspective that is in perpetuity that didn't exist, because history is always written by the victors. And so you kind of change the narrative of what it is. But blockchain is going to present, this is what the facts were at the time. What does that mean? You can interpret it differently, but it doesn't get spun, because none of us go back and read the newspapers from 1822 to get our spin. We've read it because we've read something from Neil Ferguson or somebody, and we go, well, that's roughly true because he's a good guy. So I just think it's super fascinating. Look, as ever, amazing to chat to you. I think we could have spoken for a few hours because there's so much to talk about in all of this. But look, I really appreciate your time coming back on, and good luck with everything. You're up to so much. You're always a huge inspiration to everybody in this space. So well done.
Oh, thank you so much. And I think one of the things that maybe as a thought process here for us, for Animoca Brands, as a company, we really sort of want to build up the open metaverse. And so, today actually we have over 380 investments. I don't know when we spoke how many investments we had, but it was probably maybe a couple hundred less than that, right? And one of the reasons we invest as prolifically as we do is not because we're hoping, of course we want every company to succeed, but we're not doing it because every single company needs to have 100x return. It'd be great if they did, but it's about building an ecosystem. And in some ways we feel to us that, and we hope maybe other companies can think of it in the same way, that as we keep investing in this space, it is a way of giving back to the community that has helped shape us as well, right? So, and I think that's part of the ethos of Web3. So us making many investments isn't just about, making the best return only, but by investing back into the ecosystem, we ensure that the ecosystem itself has sort of a sustainable longer path. And I also think of this in a different way of, what if we thought of the real world or physical world in the same way, that if we have success in our own life, then, how do we give back? And by the way, we don't mean that in the sense of charity, by making angel investments or supporting domestic businesses, actually you end up contributing back to the communities as well. And those communities that do that successfully actually are doing quite well. Like, for instance, in the Bay Area, angel investing as a culture is embedded in that culture. And it's a much more thriving society, shall we say, than many other parts of the world, which don't have that culture, for instance.
Yeah, and by doing that, you create the probability of an outcome from, breakouts in the space and the overall probability of the space getting faster adoption. It's really clever. But Yat, fantastic as ever to chat. I really appreciate it.
Thank you for having me.
Hey visionaries, thank you for tuning in. For more free crypto content like this, head over to realvision.com/crypto. You'll get early access to the most brilliant minds in the space to cut through the noise, get in-depth analysis, and get you ahead of the curve with unbiased insights.